What is the VIX and why does it predict market crashes? There's a hidden number that moves every single trading day. And when it spikes, millionaires start sweating. It's called the VIX. And right now, most Americans don't even know it exists. But the smartest investors? They watch this number like a hawk. And today, I'm breaking down exactly what it is and how it predicted every major market crash in the last 20 years. Let's start with the basics. VIX stands for Volatility Index. Think of it as the market's fear gauge. It literally measures how scared investors are right now. When the VIX is low, everyone's calm. People are buying stocks, adding to their 401 kiloseconds, scrolling through Robinhood without a care in the world. But when the VIX spikes, that's when panic sets in. Here's what's crazy. The VIX doesn't measure the actual market price. It measures how much the market is expected to bounce around in the next 30 days. It's basically Wall Street's way of saying, hey, things are about to get weird. Let me give you a real example. In January 2020, just before COVID-19 shut down the entire country, the VIX was sitting around 15. That's calm territory. People felt safe. Then, in March 2020, when reality hit and everyone realized the economy was closing down, the VIX exploded to 82. The S&P 500 dropped 40% in weeks. People who had been maxing out their Roth IRA contributions were panicking. Portfolios that took 5 years to build got slashed in 30 days. But here's the thing that most people miss. If you'd watched the VIX spike before the crash, you could have protected yourself. Not predicted it perfectly, but understood that danger was coming. The VIX works because it measures options trading. Without getting too technical, when investors buy options, they're basically betting on how wild the market's going to get. When you see smart money buying tons of protective options, the VIX goes up. It's like everyone suddenly buying insurance on their house at the same time. That's a signal something's wrong. Let's look at the numbers. During normal times, the VIX sits between 10 and 20. That's your baseline. But every time there's been a major crash, the VIX has spiked to 50 or higher. March 2020? 82. August 2011 when Europe fell apart? 48. March 2009 during the financial crisis? Over 80. September 2001 after 9/11? 40. The pattern is crystal clear. High VIX equals market danger. Now, here's what you need to understand about using this. The VIX is not perfect. It's not a crystal ball. Sometimes the VIX spikes and the market does fine. Traders call these false alarms, but what matters is the probability. When the VIX is above 30, historically, you have a higher chance of volatility and downside risk in the near term. That's not guaranteed. That's just how the odds shake out. So what should you actually do with this information? If you're a beginner investor with a 401k and a Roth IRA, you probably shouldn't be checking the VIX every day. Dollar cost averaging, putting money in consistently every month, beats trying to time the market almost every single time. But understanding the VIX helps you psychologically. When your portfolio drops 10% and the VIX is at 75, you know you're in a panic situation, not a normal correction. You can handle that mentally. You can keep investing instead of panicking and selling. If you're more advanced and have money in Fidelity or trading on Robinhood, you might look at the VIX to adjust how aggressive you want to be. Some investors actually use VIX futures or options to hedge their portfolio. But that's advanced stuff. The real takeaway is this. The VIX is a warning system. It's not a prediction tool. It's the market telling you how nervous it is right now. High VIX doesn't mean sell everything. It means understand the risk. It means maybe don't put all your money in at once. It means don't get cocky. The investors who survived every crash were the ones who understood risk. They watched the VIX. They understood what it meant. And they didn't panic when emotions ran hot. This is exactly the kind of insider knowledge that separates people who build wealth from people who just hope for it. If you want to understand markets on a deeper level, subscribe to this channel. We break down financial concepts that actually matter in language that makes sense. New videos every single week. Hit that notification bell so you never miss one. The market rewards informed investors. Now you're informed.